I'm Charlotte McLeod with the Invest in News Network, and here today with me is Joe Mazumdar, editor of Exploration Insights. Thank you so much for being here in person with me at VRIC.
Yes, thank you, and thank you
Great
for
to see.
inviting me.
Of course, yes. So great to see you. We're here on the first day of the conference, and tomorrow you have a couple of presentations happening. One of them is a panel on favorite commodities of the decade. So I was interested to see that because usually we're talking about commodities for right now
Yeah.
or of the moment. So if you were choosing a commodity of the decade, what would that be?
I mean, right now, and I've been pushing the portfolio as well towards more copper projects. And so copper would be the one I'd be going for because, some of it's battery metal exposure, it's construction, but also on the supply side, the lack of development projects and the higher permitting risk and combined with more geopolitical risk in two of the major producers, which is Chile and Peru, that might have issues with production into a market which the demand might grow. Right now, we have near-term issues with metal demand because of China's zero COVID policy. But if I think on the supply side, that issue still is not going to go away, and I think the industry realizes that.
Yeah, and I kind of expected you to go with copper because we've talked about it before.
Yeah.
Next question for you is, how are you getting exposure? I guess we can talk about the size of company, maybe jurisdictions. I know that you've been on quite a lot of site visits lately. We can see that on your Twitter feed.
Yeah.
So let's talk about that.
Yeah. So this year, like as COVID broke, to the positive side, I've been getting out more site visits as people's regulations have been changing country to country, which was fascinating in itself, especially in January, February. So I've been getting to producing copper projects, mines in Brazil with Arrow Copper. And that, if I had to take a highlight from that, was, we see issues with water, we see issues with power, and neither one is a constraint to growth for those guys in that one place that they're actually producing in Brazil. Their power costs are like 3.5 cents per kilowatt hour, which is ridiculous, and also there's no water constraint, which is a very positive for any company nowadays. The other ones would be, exploration projects in the Iberian Pyrite Belt with Pan Global. I'm just about to go after this conference to Arizona to see Arizona Sonoran Copper, another sort of advanced stage development play on private land, which is very important in the U.S. In terms of permitting down in Arizona. So yes, I've been getting out to site more often, which is great. It's good to get out and see the projects and the people that are actually doing the work.
Yeah, and let's talk a little bit more about the value that you get out of going to see these projects because I know we've spoken about this before, I've talked about this to other people, but I think it's good to highlight just coming out of COVID, what were you missing and now what are you getting?
Yeah, I mean, the thing is that once you see the context of what people are trying to do, and then you could see physically where ore is coming from and what is the conditions of the road, where is the grid power coming from, let's say, and you see all the infrastructure, then what the management's telling you is much more believable when you go, oh, hey, like when I went to the Iberian Pyrite Belt, we stopped almost every 45 minutes at another mine or project. So it's very different from parts that I've seen in northern Spain where permitting is a bit more difficult, that you see a lot of active mining activity and people actually finding things. And that's the other thing is that, they're using these geophysical methods like gravity, electromagnetic methods to actually find new deposits, and they're working. And so you could see that, and you could see them mining it. And then you see that the company that you're invested in is right there in the middle of it. So that makes you feel better, about what you've just done.
Yeah, so those are some green flags that you might see. Are there any? What would you be looking for in terms of a red flag when you go?
Yeah, it's the same sort of thing. It's like when you get there and then you see that, it's kind of a hassle to access this area, and what's the problem with access? Oh, this person doesn't want us there. Or not a red flag, but a flag that sort of says, drilling might not be as easy as I thought it was because of water constraints. Oh, this area has a drought, and so just getting water is going to be impossible. And so where are they going to get water from? And that's a big deal anywhere right now in the Southwest U.S. There's drought conditions everywhere, and so I'm really, I want to know where people are actually going to get their water from and make sure that it's an isolated aquifer or something that they don't have to compete with anybody else for, because if there is any competition, they'll definitely lose. So, that sort of thing is what I get out of getting to a site visit.
Yeah, okay. And speaking about red flags, we're going to continue on this negative path. One thing that I've been hearing more frequently in 2022 is companies are coming out with their studies and costs are coming in a lot higher than expected.
Yeah.
So I wanted to talk to you about that, and in particular ask, how can you tell the difference between an increase that is unreasonable and something that's like, okay, well, we have inflation, maybe it's okay?
Well, I mean, let's take a look at like Magino. I mean, they came out with one number, and then they came out with another number. I think it was 510, and now they're into the 800s, I believe. And I don't think that's the final number. And so some of those were inflation, but some of it were scope changes, that they had to do more earthworks because, they had a thin veneer of glacial till that they didn't model for, and so there was more earthworks than they planned. The earlier plan included grid power, but I don't believe they got their permits in time, so now they're going to do on-site generation, and that increased the upfront capital. And also earthworks on the tailings. So some of those are definitely scope changes from the feasibility study. And so sometimes it's like, if I just take this feasibility study and just update the costs, that's cost escalation and all this other stuff. And what the benefit is for maybe, let's say, a base metal company, their revenue line might have gone up because those copper prices have gotten higher. But for a precious metal company, they might not have seen that same price increase in revenue, but they're seeing the cost increase, and that's where the margins get squeezed, and then your 30% IRR suddenly goes down to below 10%. And then you say, well, do we keep building this, or what do we do? And so that's happening a lot with these sort of 1 gram big open pit mines in Northern Ontario, but like you said, we're seeing it everywhere. And when I looked at the results from Pan American in terms of cost, it was every component, every cost center that you could think of was all up, whether it was labor, whether it was energy, whether it was supplies, everything was up. We have supply chain issues, we have labor availability, but they just can't get enough people, and that impacts productivity and makes everything go up.
Yeah, and I've had at least one person tell me this, I forget who it was, but they've said, if a company has one of these studies coming out, I am not interested. I don't want to be, waiting for that result in case something like this happens. So in your view, is it too dangerous to do that right now? Should people be looking at, companies at other stages?
Yes, the problem with development is definitely capital. I mean, capital cost increases and what works, what doesn't work. But then on the other side of it, where are we going to get this copper? Where are we going to get this nickel? Where are we going to get that metal from? And if we don't have any development projects out there, then the deficit and everything else will just be worse. So I do think of the development projects that I think make sense and can get funded, and it's really about access to funds. But I would probably say there's I would look at the shareholders, whether they can advance the project or whether these guys can get funding, where they can get funding, because that's the real important piece of the puzzle. And then also, companies are looking not just to sell an intermediate product anymore. They want to get more to a product like in nickel, getting to a product that maybe a battery manufacturer would buy. And so you can get access to capital from battery companies, from car companies, from those sorts. So you're not just looking for a joint venture with a big mining company. You can get somebody else to do it. But then the question is, can you actually build it? And then you build in the labor availability and whether you have the management team that can actually do it. So it's a lot of things that you got to think about if you get into a development piece, and it's a little bit more complicated than just picking a drill hole.
Yeah, well, it definitely sounds very complicated. And it sounds like companies are, as you say, trying to find ways around this, find ways to get access to that funding. But at the same time, not everybody is going to get it. It seems like we're coming to kind of a squeeze here.
Yeah.
Yeah, so
Yeah, well, the thing is that I would say in some metals, there is more capital out there for those projects. Right now, given the negative precious metal sentiment because of higher interest rates coming and already existing, that it would be hard if they don't have a strategic investor already in to access the capital to fund the project, especially if it's like $800 billion or something like that. Smaller projects potentially, but you really need access to capital. You really need to know that they can actually raise that money no matter if the times are good or bad. Counting on the retail sector to help you finance it probably is not a good strategy right now.
okay, so it's needing to, have access to those larger.
Yeah, and committed shareholders, like whether it's private equity, whether it's an offtake agreement, whether it's because debt's not a problem. But debt would need to make sure that the project that you have will actually work, so you need those kind of people that will actually are there to build the project, not that are just trying to sell it.
Okay, so we've gone over some of the trends that we're seeing in the resource space. Is there anything else that's on your mind in terms of, those overarching themes that we're seeing?
Yeah, I would say that the big squeeze right now is probably financing. Well, I'm going to do a talk about the investment clock specifically for gold, and what's interesting is different things that you look at suggest a different part of the cycle. Some suggesting a sell indicator, like probably harder financing, more marginal M&A, risky M&A. But balance sheets for big companies are really good, so they do have cash to, get through this. And then potentially to do an M&A if the valuations come down. So that's like a positive. So that's like a buy signal, whereas other things are like sell signals. So it's a much different cycle in the sense that the last cycle, their balance sheets were not as good. They had lots of write-downs to go through. That's not the case right now in the gold sector.
Okay. So we've I think we've gone definitely on the, less uplifting side this time. I want to end by asking you advice for investors right now. It's kind of scary out there.
Oh yeah, it's very scary. The thing is that, do you catch a falling knife right now in terms of what's going down? But it's an opportunity to pick up stuff that you've always liked. You'd like the management team, you like their access to capital, you like the project, you like the jurisdiction, you like what they're doing, but they were always too expensive. They might come back to you. And those are the ones that you should look for, and grab with two hands, because those are the ones that will recover and do well, and they might have an underlying M&A bid as well.
Okay, well, hopefully people do have that shopping list ready.
Yeah.
Thank you so much for joining me today to go over what's going on in the resource space and especially copper.
Great. Thank you very much.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Joan Mazumdar with Exploration Insights.